And any weakness of late in any of the marquee names has been bought. And we're going to see this time if that holds true once again.
Well, we'll see. Look, tech is so incredibly crowded. Even still, it's 26% of the S&P 500. And we all know that they've had huge outperformance. So the expectations are so incredibly high, even into this pullback. And I just think it's a very bad setup into the print. I calculated right before the show, FANG plus Microsoft up 60% on average from the March lows. NVIDIA, PayPal, and Zoom are up 86% from the March lows. So even into this pullback, it's not really that compelling, at least to me. And you know I've been a net seller, selling of Facebook and trimming of Amazon. I'd be happy to buy them back. But they're not down enough, and they still are very, very crowded. I think also what's important and what's exacerbating the rotation, Pete alluded to it, is this rotation that we're seeing on the macro. See, inflation expectations are starting to inch up a little bit. The dollar is weakening, and that usually is good for cyclicals and value and risk on assets. I mean, in the thick of everything yesterday, I thought it was interesting that the IWM was green. It was green for most of the day, and it outperformed relative to any other benchmark. So I actually think that we could struggle here a little bit. Let's get through earnings. Sometimes you get chances, and I think that's what we're going to get. But I think we want to wait until after earnings.
Okay, Josh, Steph just alluded to it, right? The pressure going into the print. And you have a lot of these companies reporting their earnings next week. Wednesday begins Facebook, and then Thursday, Alphabet, Amazon, and Apple. How much is now riding on those reports, given the moves up in those stocks and now a seeming struggle in some of those names?
Yeah, the Qs at 255 are still like 35 points above the rising 200-day. So we could still remain in an uptrend and have a much more substantial correction in these names than we've seen so far. And by the way, this has happened recently. We saw this happen in the second week of May, and we saw it happen in the first week of June. And the big tech stocks took a huge hit. But while that was happening, other areas of the market picked up the slack. And I think there's some element of that happening now, and it's perfectly normal. It happens all the time. It just, when it happens in the biggest, most liquid, most widely followed, and most talked about stocks, it's pronounced, right? We all sit up and pay attention. Wait a minute, how much is Amazon down this week? So I think it's something that we should pay attention to. I don't think it's a reason to completely change our mindset about what's working and what isn't. And again, as I alluded to, take a look at home builders. They look outstanding. While tech was getting hit yesterday, both the XHB and the ITB, the two most widely followed ETFs that track the home building market, both made new highs. And they continue to break out. And I could find a lot of names individually in there from the companies that actually build houses, and even Home Depot and Lowe's look terrific. So I do think that you have opportunities in places outside of tech, and that's positive. Another thing that I think bears paying attention to is the continued breakdown of the dollar. I noted last night on my blog, the Euro-USD pair just snapped a 10-year downtrend in that pair. So that's something that's caught a lot of people's attention. Mm-hmm. And then you go ahead and you look at the metals complex. You see gold, you see silver, you see the miners doing really well. I would point out very quietly the materials sector, XLB. It's a small part of the market. We don't really talk about those names much on this show, but very quietly, new record high. So there are other places people are making money away from Apple and Microsoft.
They are. Look, value's going for its fourth straight positive week. So your point's well taken. Steph mentioned the dollar as well. I get it. But Josh, are you suggesting that you could have a more substantial correction coming once again in mega cap tech? Oh, Josh's shot is frozen. Shannon, is that what you think could be in the cards?
I don't disagree with Josh's points, but I also want to go back to something that Pete pointed out. The fundamentals for these companies, despite the fact that we're seeing these loftier valuations for them and that they're really pulling the entire index up, are still very, very attractive longer term. So, do you get a rotation where you can get another 5, 7, 10% off the top? And that certainly would be concerning, I think, for the average S&P 500 investor, given the concentration that Stephanie talked about. However, if you're looking at this from a long-term perspective, I'm not sure that, anything has changed in the narrative, particularly for a name like Microsoft after their report yesterday. So, could this be a buying opportunity? Absolutely. I think that it would be positive, actually, if we can continue to see some of this breadth increase and that some of these more cyclical sectors start to pick up the slack. This is absolutely what the market needs to continue to gain over the back half of the year into 2021. We cannot ride high on a defensive trade in technology and expect us to get enthusiastic about the market in 2021. So I'd like to see a little bit more of this rotation. It offers the opportunity for people to maybe add to some of these more quality positions in technology and in communication services. And so I think it's a welcome opportunity, although you're right, it will create some panic for those that have a lot of S&P 500 exposure given the concentration.